All right, we're back for another episode of the YVR REMO show. We're here to just talk about the announcement, fresh off the press from the Bank of Canada has decided to hold the overnight rate at 5%. So that's good news, meaning that there's been no change to the rate. Not really much of a surprise given what occurred on Friday with the GDP report. Most economists were actually forecasting about a 10% chance of the rate going up today after that report came out. And that same group of economists were predicting now about a 20% chance that the rate goes up for the remainder of this year. So the more data that comes out, the more that could change. But the good news for now is that we have some breathing room, and we'll get into what can come from that going forward here.
Yeah, I think the way I'm taking this is it's good news today, but obviously or probably proceed cautiously tomorrow. They did mention in their presser that they're prepared to do more, but that's been like the company line for like all these central bankers across the world, right? So no one's ready to kind of throw in the towel and say rate hikes are done. So we just got to see where things go from here, right? Like the GDP story was positive for interest rates. The economy showed contraction. Like if you're wondering when are we going to see rate cuts or when rates start to come down, it's generally the labor market and the economy. They need to see that start to contract. So probably the bigger question is what happens with the Americans who announced, I think, on the 20th of September in a couple weeks time. So yeah, for Canadian borrowers, anyone sitting in a variable, myself included, it's good news, right? It means we get a bit of breathing room, like Dean mentioned, and then we just have to see what comes, right? They keep saying they're going to be data dependent, so if we keep seeing economy, labor market, all that slow down, that just means we're not going to see rate hikes potentially moving forward.
Yeah, so really good points. I mean, generally speaking, this is good news. The more that you dig into the Bank of Canada report, which is accessible for everyone, it's online. Just look up September 6th Bank of Canada rate announcement. You can read through it. It's pretty confusing and convoluted. There's reference that inflation has come down, and that's why they've chosen to pause and maintain current rates. There's also reference that certain measures of core inflation are still up, and that's why they're balancing, and there's potential for rates to increase further. So, again, like Tyler said, it's great news. It's hard to get too excited on this because we also saw what the Bank of Canada did earlier this year, which was they did pause, but then they had to get back on track with raising rates. Inflation is at 2.8%, and their goal from day one was to get inflation inside of 2 to 3%. So we are in that range, but again, because of these other certain measures that are factored into that, I know that we could definitely see some further rate hikes to come. So hopefully not, but it's just something to prepare yourself for financially, mentally, what have you. Just another consideration here, because this comes up all the time. Bank of Canada, if they were to raise rates today, that doesn't mean that fixed rates are going to raise by 0.25%. And if they decrease rates by 0.25, it doesn't mean that fixed rates are going to drop. So the Bank of Canada only has a direct impact on variable mortgages, lines of credit, anything fluctuating. The bond market is the separate piece, which is the direct indicator of what happens with fixed rates. And bond market goes up and down for a lot of different reasons. So I guess my point is, as much as the Bank of Canada didn't raise rates today, that doesn't mean that fixed rates couldn't jump tomorrow, right? So just keep that in mind. If you're pre-approved, if you're shopping for a home, and you have an interest rate hold that might be expiring in a month or two, these are things to be very aware of, because again, you don't want to get this too confused that rates aren't changing and then all of a sudden your rate holds up in a month and rates are quite a bit higher than they were when you initially locked that in, right? So as of today, there is no impact to people in variable mortgages and lines of credit, which again is great news. We've all kind of been through a bit of a war here over the last year and a half. There's been 10 rate hikes since March of 2022, and there's only been 3 meetings where they haven't raised rates since then. So again, just trying to make it really clear for everybody. The pre-approval piece is definitely a big consideration just for anyone that's an active purchaser. I know I touched on this, but again, 4 or 5 months ago, we did see some pretty reasonable rate decreases. We had fixed rates down to about 5%. People that locked in for 120 days, those rate holds are starting to expire. A lot of them September, October. So, those rate holds that were at 5.5%, you might be locking in today at 6.3. So there is a pretty big impact on that. So just a note for anyone that's shopping, make sure you're aware of your dates, your rates, and what that's going to mean for your qualification and just overall cost. So just moving forward, I mean, I guess, Dean, if you want to kind of touch on just expectations for what's to come. I know we touched on this a little bit, but touch on that. And then I know Tyler was going to kind of finish us off today.
Yeah, absolutely. So, I mean, those are good points, and yeah, just to really highlight that piece on pre-approvals and pre-approvals that potentially are expiring. Those are ones that, if you're in that situation, definitely want to address that. Just some of the expectations going forward. I mean, we are expecting higher inflation going forward, just given the the measuring metrics there. Based on what we're measuring from on last year to this year, it is expected to go higher. So how the Bank of Canada deals with that, it's really unknown. We're at the point, and a lot of experts are at the point where they don't believe that a higher interest rate or another interest rate hike is really going to impact that. And a lot of these hikes, especially the two most recent hikes, really haven't made their way through the economy yet. It's about a 12 to 18 month cycle to really start to feel the impacts of interest rate hike. And so we are hopeful that this will carry through to the end of the year from a perspective of a pause, but very much aware that it could come back really quickly, just given what happened in the past. So just to kind of reiterate that piece, let's keep a close eye on it. Like I think Tyler, you made a good point earlier. We really just don't know what's to come. It's good news for today, but let's check back tomorrow and watching the bond market is going to be something we'll be doing closely to monitor. The hopeful expectation that fixed rates will start to drop based on this impact from the Bank of Canada. We're hopeful that the bond market reacts and we start to see some of these fixed rates come back down.
Yeah, agreed. I mean, not to sling mud, but these guys, especially the Bank of Canada in particular, has just been so wrong, for the last almost 2 years, right? You just have to Google Bank of Canada, we won't raise rates, and you'll see articles from I think end of 2021, 2022 saying they won't raise until 2024. And they came out in February and said, we're done. A lot of that's out of their control, but that's why I said at the beginning, good news, proceed cautiously. I think what we'll probably watch moving forward as well, other than just the same data the Bank of Canada is announcing and looking at, is just buyer sentiment, right? You always hear about people thinking they can time the market, which, as we all know, is basically impossible. But, if you're a buyer and you believe that interest rates are at their peak or approaching their peak, that might be a good time to jump in, just because, as we know, interest rates and house prices are inversely related or correlated. So as rates go up, typically values come down. Rates go down, typically values go up. So that's probably what I'll be watching. And to Derek's point too, I think he was even being a little bit conservative. We were booking mortgages in the 4.5% to 5% range in sort of March, February, and boy, don't rates look like those rates today look fantastic based on what we're seeing today. So if you're sitting in a variable rate, it's not hard to find a rate calculator online. Of course, you have the four of us as a resource for this as well, and just run your balance based on a rate, say in that 4.5% to 5% range. And if we get to that point in the market, and you can say, okay, yeah, that's a payment that I like, I'm done with this variable. Well, then maybe you have a target to kind of look at to maybe eventually lock in or refinance or restructure. So, and if we are approaching peak rates, I know we're starting to get a little bit more inquiries. Maybe variable comes back into play, which sounds insane, I'm sure, to some listeners that were probably scarred from ever going variable again. But maybe that comes into play, because it's not a bad trade or not a bad bet if we are kind of at or near the peak. So, I mean, that's all I have. I don't know what's even more aggressive than beating a dead horse with this, Bank of Canada rate talk, because it's just it's pretty relentless the last 18 months. But yeah, that's it from me.
There's only so much we can chat about here. I mean, we definitely don't want to go down the road of any negativity or or bashing, I guess, to say to take some words out of Tyler's mouth there. But at the end of the day, I mean, that we touched on some really good points. There's definitely some good feedback here, and just in regards to how this impacts you going forward, and some brief expectations, and just honestly more so just being cautious going forward and continuing to monitor the market, which we'll be doing for all of our clients going forward, as we always do. So we'll wrap it up there. Great episode. Thanks for joining us early in the morning here. Depending on when you're listening to this, we recorded this almost immediately after the Bank of Canada update. So we look forward to doing more. And if you have any feedback or any suggestions, please don't hesitate to reach out. We're happy to touch on all those topics that you want us to touch on.